In this video, I will do the technical analysis of Dow Jones Industrial Average Index for the week commencing from February 22nd, 2022. This technical analysis will be in two parts. First, I will do it on the weekly chart and then I will do it on the daily chart. So this way we will be able to get the most accurate results as we are getting for last many months. Before I do the technical analysis, let me tell you these two things. Okay, number one, that currently markets are extremely volatile. Okay, means markets are extremely risky as of now to trade. Okay, so what I advise is that if possible, then do not trade for some time. Okay, and this is because the reason is, okay, as everyone is aware of, the reason is the Russia and the Ukraine tensions. So you can see like markets are coming down, or again, some kind of this kind of pattern. Means as of now markets are extremely risky to trade, in simple words. Okay, number two, if you are trading in options for 1 or 2 years of expiry, or if you have bought shares of any company, in that case you need not to worry about your losses, because this thing, okay, this mayhem, particularly because of it means this the Russia and Ukraine, okay, this thing will be over, okay, within a month or within a quarter. Thereafter all of these markets, okay, these the markets will behave normally, and then you will see that there are profits in your account, because eventually you will be in profits, you will see profits. Okay, not immediately, but after a quarter, after 6 months, after 9 months, you will see profits for sure. Okay, so my advice is to hold your trades and do not panic. Do not panic, do not panic, again, do not panic. Okay, this thing is temporary. Now let's do the technical analysis. Okay, so I will begin with the weekly chart first. Okay guys, so we are here on the weekly chart. This is the weekly chart. Weekly chart means one candle represents 1 week, not 1 day or 1 hour. One candle means 1 week. Okay, first the Bollinger Bands. This is the lower band of the Bollinger Band. There comes the median of the Bollinger Band. Market has closed between the lower band and the median, which means the market is bearish. Now comes the moving averages. In moving averages, there is a clear fan out. Sorry, not fan out, but there is a crossover, and this crossover, okay, this is now seen after 1.5 years. Okay, after October 2020, this is the first time we have seen a crossover on the weekly chart. Okay, it is a confirmation of the bear trend. So through moving averages, market is bearish. Then comes the Ichimoku. Market has okay, so market did not enter into Ichimoku, and market is still market has closed above Ichimoku, but in the next week it is expected to enter into Ichimoku. But as of now through Ichimoku, market is bullish. Okay, because it is trading in the bullish zone of the Ichimoku cloud. Okay, fair enough. Then comes some other technical indicators. So if you see here, first the MACD. So MACD is directional. MACD is clearly bearish, clearly bearish. Okay, and if you see MACD is 33 and the signal is 268. So there is a lot of divergence here. So MACD is moving average convergence divergence. So there is a lot of divergence here, which means yes, that market may come down. Okay, but eventually market will try to correct itself. Means because in order to reduce the divergence, market has to rebound a bit, or market has to hold here, okay, at least for 1 or 2 weeks. Then comes the stock RSI. Stock RSI is again clearly bearish, okay, because the K channel is 14 or almost 15, and the D channel is 16. Divergence, okay, divergence in the prices of the candles, it is normal, which means that yes, it still has potential to come down. Then comes the momentum. So momentum is clearly supporting the bears. Okay, so through all of the technical indicators except this the Ichimoku, okay, it is clear that on the weekly chart, okay, the market is bearish. On the weekly chart, it is clearly bearish. So now let's move on to the daily chart to see how the market is going to behave exactly, okay, in the coming days, okay, and what the technical indicators are saying on the daily chart, and what are the limits for the market to trade, like the lower limit or the upper limit. So let's move on to the daily chart. Okay guys, so we are here on the daily chart. This is the daily chart. Now daily chart means one candle represents one day, not 1 week or 1 hour. One candle means one day. So let me first write down the support and resistances, okay, and then we will do the technical analysis here. Okay guys, so these are the support and resistance levels here for the market. Okay, this is the daily chart. So now let's do the technical analysis. This is the lower band of the Bollinger Band. This is the median of the Bollinger Band, which means the market is bearish. Then the moving averages. There is a clear fan out in the moving averages. Market has closed below the moving averages. The market is bearish. Then the Ichimoku. Market is trading below the Ichimoku in the bear zone, okay, which means the market is bearish. Okay, so we have MACD. If you look into MACD, so MACD is clearly bearish. Okay, MACD is negative 240 and the signal is negative 172. Okay, and so the directional MACD is clearly bearish and the divergence is not that much, which means the market still has potential to come down. Then comes the stock RSI. Stock RSI is clearly bearish because the K channel is 11 and the D channel is 31. Divergence in the prices is normal, okay, 39.40, that's not a problem. Momentum is supporting bears, which means the market has potential to further come down. Okay, so through all of the technical indicators, it is clear that the market is bearish, clearly bearish. Okay, now let's deduce the movement of the market. Okay, so see, this is the 200-day moving average. Okay, now because the market was coming down heavily on Tuesday, so Monday is the holiday. Tuesday, 22nd of February, there are very heavy chances market will come down. Okay, now whenever market comes down, the lower band of the Bollinger Band will be somewhere around here, and the market will hit 30. This is 33,790. Okay, 33. This 33,790. Okay, so now whenever market comes, chances are it is going to hit 33,790, and if it breaks below 33,790, then it will come to 33,585. Okay, so on Tuesday it is expected that market will remain, okay, somewhere around here or maybe here to this level. Now on 22nd of February, 23rd. Okay, now on 23rd of February, okay, this 200-day moving average, okay, it will be here, but this moving average, it will come down and will be here, okay, and it will hit the this is the 200-day moving average. Then other moving averages will be here. Okay, now on 23rd of February, okay, if there are no more bad news, particularly from that the Russia and the Ukraine, if there are no more bad news, in that case you can expect a rebound on Tuesday and on Tuesday is 22nd of February. On 22nd of February, Tuesday, it is expected to come down. On 23rd of February, Wednesday, it is a rebound is expected. On 24th of February, Thursday, again a rebound is expected. Okay, see, what we are looking for is a hit through the rebound, okay, here in the moving averages. So as soon as you see a rebound, okay, and through this rebound you will see that the market is going to hit 200-day moving average and all of these moving averages, and then the market will fall further. Okay, so it was coming down, it is expected to move up, a rebound, okay, particularly on Wednesday and on Thursday, and then there will be a rebound. Okay, so sorry, not the rebound, but the bear movement is expected. Okay, so market is not going to be bullish until and unless market now crosses 200-day moving average and all of these three moving averages on 2 consecutive days. Then only Okay, and if that happens for some reason, then only we can say that yes, market has chances to move up, and then it will find the Ichimoku, and in that case it has to cross the Ichimoku, it has to close above Ichimoku two consecutive candles, and then only we will be able to say that yes, market is going to move up. But as of now, situation is extremely bad. Okay, particularly the geopolitical situations are extremely bad. Okay, and you know that whenever geopolitical situation or economic situations are bad, in that case, technical indicators do not work at all, because it is the emotions of the people, particularly panic. Okay, this is what dominates the market. So this technical analysis, okay, this the technical indicators, they will work, okay, provided that the things are normal. Okay, but if things will be, from bad to worse, in that case, okay, do not think about a rebound, do not expect a rebound, but expect that everything is going to fall. Okay, as simple as that. Okay, guys. Anyway, so I have given the link to my Discord spreadsheet in the description of the video, so you can take a look. And guys, this was my technical analysis, okay, of Dow Jones Industrial Average Index for the week commencing from February 22nd, 2022.